Hey everyone, welcome back to another episode. So, in today's session, we're actually going to be talking about Tesla's earnings call. It was met with so much enthusiasm, so much new data, and so much more of everything. So Elon Musk really delivered in this earnings call. I learned a few new things as well about Tesla that I didn't know before. And so we're actually gonna just take a look at the key takeaways from the earnings call, and then we're actually gonna look at what is happening in Tesla stock and how this company is actually performing over the quarter, over the year. So we're gonna do a deep dive in it. Alright, so for the earnings call, one of the major talking points and biggest things that I learned was that the Model Y is actually the best selling car in the world. And yes, the Model Y actually outsold Toyota Corolla and Toyota RAV4, which were actually the two best selling cars in the world before. So the Model 3 and Model Y for Tesla actually sold about 1.6, 1.7 million units, and out of this 1.7 million units approximately that were sold for the Model 3 and Model Y, about 950,000 units were produced in Shanghai. Now, California actually had produced about 550,000 units of this, while Texas had only produced the Model Y, and this was actually about 250,000 units. So in total, Tesla had produced over 800,000 units for the Model 3, Model Y in the top three areas for this. And so the actual amount of units that were produced for the year was about 1.6 million, and over the 2 years it's 3.4 million, while there was about 1.7 million delivered over this year alone, and 3.44 delivered over the 2 years. So what had happened was that they actually had a few units that were produced from 2023 that was not sold, and so Tesla actually had just sold them over in the 2024 period, or they actually had just recorded it as sales on the 2024 period. So that's why there's actually more units being sold than actually produced. And if over the 2 years it's actually cancelled out. So the next key talking point was that Cybertrucks actually is the best selling electric pickups. And so what this really means is that since Elon Musk had actually produced the Cybertrucks, it has been met with mixed reviews. It was first loved, and then right now it's a little bit mixed. So persons still love the Cybertruck, but based on what's happening with Tesla at this moment, persons are a little bit drawn back from it. Exactly. So Cybertrucks is currently being produced in Texas alone, and they produce about 250,000 units right now. And so the first set of productions of the Cybertrucks were actually sold out because they were actually in pre-production that they were sold, and so the units have just been delivered as the time goes by. And so Cybertrucks are the best selling pickup EVs right now. So they're outselling Rivian, they're outselling Xiaopeng, they're outselling Neo, outselling all these other brands that does some sort of SUV or pickup or crossover in that sense. So Tesla is dominating in that. Now, another key point that Elon Musk had raised was that Tesla is the best selling electric vehicle in Europe, and it's one of the fastest growing electric vehicles in countries such as South Korea, Philippines, and Qatar, Lithuania, and Chile, and a lot more to come. So as it stands right now, the EV production, the EV vehicles being sold in these regions have been growing, and it's a bit funny that they highlighted only Chile for South America, and this really is just to show you that as it stands right now, Chile would actually have been demanding the Teslas and the EVs more than the other South American countries, and this will be because Chile would actually have been creating the infrastructure, hence why the demand is increasing. Because if the infrastructure is not there, persons aren't going to demand the vehicle. So that really is that. So right now, Tesla is in the process of actually building a semi factory, so that is really just the hopes for the trucks that they're building, just really to be fully automated. And so this really is what Tesla has been working on. So they have been doing it for about 2-3 years now, and Elon had shared in his presentation that a lot of persons told him that it would not be possible, it could not be done, and he actually, being the spontaneous wonder kid that he is, he has to prove everybody wrong, and he has to do the impossible, which is exactly what he has done with the semis right now. So it's currently in production, it's not completed as yet, but it is going well, and he's happy to report that they should be completed in about another year or two based on how things are at this point in time. And right now, Tesla is being focused on autonomous driving. So, autonomous driving, as Elon Musk, the CEO, as Elon puts it, is the future for electric vehicles and for driving. And he actually had put it this way, that if you spend 10 to 12 hours driving a week, then basically with autonomous driving you can get that back. And another point that he had raised was that with persons, majority of the persons who drive would drive, they park the cars, they go to work, and then they leave in the evenings and they head back home, and maybe even run a few errands on the roads as well. So what Elon is suggesting is that rather than have the vehicles parked up, you could actually be cash flowing it. So you drive the car to work, and then you could run the car on the road as a taxi, as a food delivery, and it will be able to manage itself due to the autonomous systems that it would actually have put in. So Elon had suggested that there will be about 10 million units of autonomous vehicles on the road in the future, in the next 10 years. And so he stated that during the next 10 years, all Tesla vehicles will be fully autonomous driving equipped. So, and the price will be the same, so it would not change. So if you buy a car that is not autonomous and you buy one that is autonomous from Tesla, then the prices will remain the same. And he actually had given a big shout out, a big praise to his services team. So he has been focusing a lot on services lately. So as it stands right now, Tesla is they were sales focused, but they've been now pivoting to actually service oriented. So rather than being focused on the sale of the vehicle, they're now focusing on the service that comes with the vehicle. So Elon has suggested that they are pushing services. They want great services. They want people to have great experience with their servicing of their Tesla, because if you like the service, nobody's really going to tell anybody else about it. But if you love it, you'll actually share that experience with another person, a friend, family member, maybe post it online on social media. You just want to get the word out that the service was so great. So Elon really had given praises and the flowers to the services team, who really earned it. So right now, the supercharger network actually has been growing as well. So superchargers have increased about 32% for the energies delivered, and the network growth is about 19%, while the team efficiency is twice the amount. So the superchargers really has been worldwide, so it's growing in countries such as the United States, Europe, so that is England, France, Germany, China, South Korea, all these other nations. Chile have been growing in terms of the supercharger stations that have been placed across the world, so they are really growing. So the goal for Elon is that Tesla should be the number one pick for persons, and not just for EV enthusiasts but for everyone. And so as it stands right now, a lot of persons have mileage anxiety, which is that when you drive an electric vehicle, you're unsure how far, how much range you'll be able to get from it. So with Tesla investing so much into their actual superchargers and placing them strategically across the world, you should be able to actually jump into your Tesla, and if you want to go across the country, you should feel comfortable without wondering where you are going to actually charge this Tesla. So you'd go, and as you'd drive and go to a gas station and you fill up, he's saying stop at the supercharger, grab a cup of coffee, do what you need to do while the charging is taking place, and then you can leave and you can finish your journey. So with, and the last thing on the actual earnings call is that they currently have the Powerwall 3, which is a home energy product. And so what this really is meant that if there is some disruption in the actual power grid, then the Powerwall 3 should really kick in and be running. So if it is paired with solar energies, then, well, solar panels, then the Power 3 should actually give you access to actually be fully off the grid. So what that means is that if you currently are paying light with the service providers, the energy service providers, once you have solar panels and you're in an area that's sunshine is very abundant, then you should be able to go off the grid. Essentially, that's what Elon is saying. So let's jump into the actual financials for Tesla. So right now, the actual revenues for the company is actually down about 1% over the previous quarter and 8.2% over its previous year's quarter. The total revenue is currently at about $25 billion. Operating expenses has increased by 13.86% over the previous quarter and 9.35% over the previous year. Operating profits actually increased by 69.28% over the previous quarter and 31.63% over the previous year. And the beauty with operating profits is that it tells you exactly how the business is doing based on its operations and its runnings. And so some investors really look at operating profits to know if the company really is a good one, if it's worth investing in over the long run period, because sometimes the companies actually would not have a very attractive ROE or a very attractive net income, but the operating profits is attractive. And so if they have a lot of faith in the company and growth in it for the long run, then they would actually make their decisions based on just operating profits and a few other metrics which they would have developed over time. And so this really has tied into speculative trading as well too, in terms of you're betting on the future and not on what is happening right now. So you're investing with the hopes that the company will really turn around as much as the operation says that it should. And so this is really a tale of two investing, so it's speculative and value as well at the same time. So it's like a tale of two cities almost. Dick Charles comic, yes. Alright, so the adjusted EBITDA is 5.51%, 24.51%, and EBITDA really just tells you the operating profits, operating expenses, cash flows, and really in how effectively the company is managing and doing at this current period in time. Net income is actually up 6.9% over the previous quarter, and surprisingly it's down about 70% over the previous year's quarter, as it was actually at about $7 billion and now it's at about $2 billion. So it's a huge fall off in the net income. And for more details on what exactly could be the causes of this, there's a previous video I'll link at the end of this so that you can watch for more details on the what has happened with Tesla and why they have been falling in recent times. So the assets for Tesla has actually been increasing. So assets increased by 1.85% over the previous year and previous quarter, and 14.92% over the previous year. Cash and cash equivalent, which is under the current assets, is the largest asset holding portfolio with $36 billion, and that has grown by 8.66% over the previous quarter and 25.67% over the previous year. And this really just suggests that Tesla is holding a lot of funds in cash, so they're having it readily available. So it's either in cash or in some short-term investments that can quickly be converted into cash in the event that something should happen and something should occur. They have money available ready to pull from and to deploy elsewhere into the operations, into the company, to clear off debt, those sorts of stuff. So that really is why they have been having the cash and cash equivalent so high. And the next thing is the property, plant and equipment, which is the second largest account for the assets, and this is a non-current asset, so it's actually down about 4.76%, but over the previous year it's up about 20%, which suggests that a few equipment have been sold off, and so this would have showed why the cash had actually increased and why properties has depleted. So that really is that. So total debt for Tesla is actually at about 40% over the previous quarter and 40.34% over the previous year. The total debt actually had increased by 40.46% over the previous quarter and 40.339% over the previous year's quarter, while debt to equity on the other hand increased by 65.68% over the previous quarter and 67.62%, which shows that there has been some decrease in the debt to equity, but the debt ratio has pretty much remained flat in terms of growth. Returns on equity, which is another key indicator as to what investors look at in terms of investing in the company, has actually been very flat for Tesla. It's a bit disappointing at just 3.165% over the previous quarter. However, over the previous year it was actually at 12.487%, while returns on assets would be even lower at 1.91% over the previous quarter and 7.435% over the previous year. Now, the current share price for Tesla is at $272.06, and it's down about 5.58% over the past 24 hours and 28.27% from year to date. which suggests that there still is a lot happening in terms of investor confidence, investor viewing of the company, and so and the market cap for Tesla is actually $852.48 billion, and this is really great, really phenomenal for a company that does electric vehicles and pretty much just clean energy, as it really shows that persons are invested in electric and going green and in companies that can really benefit and is better for the environment, cleaner airs, those sorts of stuff. And Tesla has also branched off into artificial intelligence, so this should also have some positive effects on the company. Really and truly, there is a few changes that needs to be made based on the investors' perception of the company. So is Tesla a good stock? Well, based on the data that is presented in front of us, I'm unable to say whether it is or it isn't. And so what I will say is that Tesla currently has shown signs of actually doing well and shown signs of resilience. They have grown their Model Y units and have it actually overthrown Toyota in terms of the best cars, most units sold, most units delivered. And so this is a great achievement because Toyota has had that position for a very long time. And so the fact that Tesla was able to overthrow it is great. The returns has also shown that they have been growing over the past few quarters, years, but there has also been a decline as to everything that is happening as well too, in terms of the returns, in terms of the data, in terms of just profits in general. So with all that is happening right now, Tesla, they would need to address these investors' issues and concerns. And once these are addressed, then the share price should also start reflecting that new level of comfort and confidence that would be instilled in these investors' minds. So that's really all that I have time for today. Thank you guys so much for tuning into this episode. If you do like it, I ask that you give us a thumbs up or a heart wherever you consume this material. Leave any comments you may have down below, and also subscribe to the channel so that you do not miss out on any new episodes as soon as they are launched. Until next time, take care. Love you guys. Bye.